And welcome to Real Estate Raw. Bill Ham. This is our regular session on Wednesday. Thank you for joining us. As always, we are going to pick a topic. Today's topic is going to be due diligence for multifamily. So I'm going to stall for a minute and sort of give everybody a second to get in here. As always, I want to thank Monica Wyndham. Monica Wyndham is a longtime good friend of mine and business partner. She is the CEO of Echo Residential Property Management, and Monica has a tremendous amount of experience in the real estate management and due diligence and property asset management, what I'm trying to say, world. So if anybody needs any help with property management, if you already have an existing company, Monica is offering consulting services. So certainly reach out to Monica if you need help with your management company. If you want to learn how to buy real estate, invest in real estate, then I'm the one to help you with that, and you've come to the right place. So today we're going to be talking about due diligence for multifamily assets. There are three major topics that we want to discuss when doing due diligence for multifamily, and that is going to be the physical due diligence, the financial due diligence, and the lease audit. Those are the three things that we're going to cover today, and those are the three sort of pillars, if you will, of doing due diligence. Monica, I'll get, hey, Bill, and everyone. What will I get right one day, Monica? What do I always get? I always get something wrong. Monica's always picking at me. Anyway, hey, if you're new here, certainly post, tell us who you are, where you're from, and let us know if you have any questions that you would like to get answered. If you have anything posted, and if you have any topics that you would like to hear about in the near future, something you want us to talk about, certainly let us know. Hey, Rob, thanks for joining us. Rob's an old student. So glad you're all here. All right, so let's get started. We're talking about due diligence today for multifamily. Again, we've got the physical, financial, and unit walkthrough. Those are your three major portions of due diligence for multifamily. All right, so at this point in time, what we're going to say is kind of run through the process of buying. Let's say you've gone out, you've looked at a property, you've analyzed it, you've submitted a letter of intent. Okay, the letter of intent comes back, that's the LOI. All right, now that you have the LOI, you are going to give that to your attorney. Let me be clear here. When you're talking about commercial real estate, most of us are not qualified to actually negotiate contracts. I myself do not negotiate contracts. I negotiate deals. I negotiate letters of intent. My attorney negotiates contracts, right? So I take this letter of intent that I've gotten the seller to agree to, which, by the way, letter of intent is just your major points about the deal. I take that over, I give that to my attorney. My attorney is then going to craft a purchase and sale agreement. All right, the seller and I now agree, a bunch of negotiations, we agree, we execute the purchase and sale agreement. All right, normally right there, that starts your effective date. It's the signing of the contract, and what I'm talking about is the day that all of the other time frames start from. So the first thing up is now going to be due diligence, all right? Normally speaking, that is from the execution of the contract out to 21 or 30 days, give or take. Industry standard for multifamily is usually about 30 days. If you're trying to be a little more aggressive, then you can be. If not, your 21 days is more aggressive, what I'm saying. And if not, then 30 days is pretty standard. Going shorter on due diligence is a good way to get an offer accepted if perhaps you're not being the most competitive on price. So a lot of times I've been able to get deals because I was not the high bidder, but I was showing a shorter due diligence window. So just a thought, but you got to be careful with that. Obviously shorter due diligence means more risk and less time you get stuff done. So we've signed the contract. We've now tendered our earnest money. Clock's ticking. We're in due diligence. Normally, the due diligence window in a contract or any sort of real estate deal is the time frame in which you get to go in, inspect the property, and you can get out of that contract, receive your earnest money back for any reason. All right, that is what due diligence is for. It allows you to go in and to verify that the property is what the seller says it was, right? Because sellers can lie, sellers can hide things. Sellers can fake books, right? You get a set of T12 from a seller. How do you know that money is really in the bank account? They're not just lying about those collections. Due diligence, all right? So there's no real order in which you have to start off doing due diligence, but what I recommend is that you start off with the cheap stuff first. All right, so we've now executed the contract. We're under due diligence with our seller. there are three things you're going to want to do now. And as I said, it's the physical due diligence, which is going to be your unit walks, going on that property and physically checking the buildings. You're going to have financial due diligence. That's going through the bank accounts, reconciling books. That's what Monica's great at. And then lease audit, also a specialty of Monica's. And that's going through the individual property records of the tenants. Okay, so starting off just randomly, let's say we go in. Keith, good. I see you. I saw your text, man. I was just in the middle of doing this. I'm glad you're here, Keith. Oh yeah, Keith. By the way, I forgot to mention we're gonna have Keith speak with us for a little while here today. I actually completely forgot about that, Keith. My apologies, man. I'll talk to Keith in just a second here. So due diligence, going through. We're so starting over. We're going to have financial, physical, and doing the lease audit. So starting off with financial, just going anywhere. What I would do is go and get the property records. So you need your T12, you need the bank statement, you need what you have going on, right? And then what you're going to want to do next is get the bank statements or the tax returns. You have to be able to verify that either way. Tax returns or bank statement, whichever the case. So you're taking your T12, you're looking at that each 12 months, you're going to take that bank statement and you're going to reconcile the T12 to the bank statement. You're going to kind of go line by line or month by month, making sure that each seller puts the seller has put the money each month into those bank accounts, and that you're making sure it's in there. I like I like bank statements better than a tax return. If for some reason the seller has sort of commingled information in their personal bank statement, something like that, tax return will work. If you have no ability to verify the information that this individual has given you, then you're gonna be taking on a lot of risk, and so that's what that's for. All right, so you're gonna have someone do the reconciliation. If you're not good with books, you're not good with accounting, then what we want to do is to have an accountant, have someone like Monica, have someone who does bookkeeping go in there and do it for you. I personally suck at accounting, so I don't like doing book reconciliation myself, but it's very important that you do that. You got to make sure that the money coming in equals everything. Not as concerned about expenses, really, mostly about the collections. That's what you're super after in the beginning with due diligence, financial collections. Make sure they're actually collecting that money. All right, next we're going to go to the unit walk, okay? Pretty straightforward there. You need to walk all the units on that property, every single property on there. That's what we're going to do. So walking every unit. All right, let's talk about that. First off, I recommend that you personally walk every unit on the property. Fine, but what if you don't know what you're doing? What if you're not a building inspector? What if you don't know physical plan or maintenance or things of that nature, that we don't know how to get on there? So that's what we got to go in there and do is walk each one of those units. If you're not an expert at that, then you need to bring one with you. You can go all the way to a high level of hiring a building inspector to come out and walk each unit. I had someone ask me the other day about this. They went out and got a quote, and they got something like $5,800 a door to come out and inspect that property. I thought that was an extremely high number. I have not used a professional a building inspector to come out and inspect units in a long time, so I don't know what the actual cost is. If there's anybody here that knows what building inspectors charge per unit, please post it in here. What I've always done is use my own staff, Monica. I've had other maintenance people that would come with me, would go out and walk all the units. So you need to do something in there. You need to know what you're looking at, or you need to bring along maybe some contractors who do walk every single unit. Do not let that property manager keep you from going in a unit. That is a huge mistake. I tell you, if you don't get in that unit, that's going to be the unit that's the meth lab or the fire happened in and it's burned to the studs or whatever the case. You don't want to do that, right? You've got to walk every single unit. All right. If they have a unit that's locked, can't get in, dogs in there, tenant can't change the keys, that's fine. Notify the tenant, notify the management to give the tenant another 24-hour notice, and then you come back in 24 hours and you actually walk that unit 24 hours later. Do not buy a property you haven't walked every single unit. All right, what are we looking for when we go inside a unit? Well, you've got to be looking for the condition. You want to look at the plumbing. You're looking under the sink. You're looking just for the general feel of the unit. You're looking for leaks. Look at the water heater. Look at the electrical. Look at your panel box. It's a big one. The panel breaker, is it old? Is it new? Do you have GFCI outlets? Are your smoke detectors dual smoke, CO2 or not. Insurance a lot of times is getting real big on that right there. All right, so Monica, have your physical walk team use a rent roll to verify vacancy and cross lease with the audit? Yeah, great point. So what Monica's saying is you want to be, as you're walking those units, you want to have that rent roll with you in your hand, and you really want to be paying attention to vacancy and to who's in those units, right? So if this thing says that rent roll says it's occupied, and you walk in that unit and it is vacant, you need to cross-reference that. Or if it says it's occupied or vacant or whatever the case, really pay attention to that. If you see units that are marked down as occupied and they are vacant, that's bad. That means that person has skipped out or they've moved and the management hasn't caught up. If that says that unit is vacant on the rent roll, there's somebody living in there, you might have theft by your management. Maybe they've moved in a friend of theirs or something like that and they're stealing. All right, before I forget, I want to take a side note here real quick. Monica has posted a questionnaire wanting to know how much notification you all want ahead of time when these events come out. It's like she's been sending out notices to everybody, I think about an hour or two ahead of time. So please check that in our post. Let us know about how long in advance you want to know about these events coming up. I think it's about 24 hours. It seems to be the running rate. So please fill that out for Monica. All right, so going back, we've got our physical walk. Again, that's walking through all the units, going through each unit, making sure that everything is what it's supposed to be. We want to get inside every single unit, verify vacancies. We're using the rent roll for that. Bring someone who knows what they're doing, either a building inspector. I used to use contractors. Before I had money, I would just bring an electrician, a plumber, a carpenter, people that I worked with, and I would have them go through the units and sort of give me quotes on the cost of everything that they saw in the units. It served as my inspection, and then I would turn around and give those very same contractors the work that needed to be done on that property. So I was essentially getting free due diligence by bringing contractors, then give them the work. All right, so that's that. Lease audit. We've talked about our financial audit. We've talked about that. You need to be pulling bank statements. You need to be pulling tax returns. You're verifying the deposits, not so much the expenses, but the money, make sure it's in there. And then lastly, we have a lease audit. All right, this is exactly what it sounds like. You are now going to take the rent roll, right, and you are going to go sit down and go through the tenant files. This could be, if it's an old school mom and pop type property, those files might literally be physically at the office. If they're running a little more of a modern program, perhaps they email that over, they send over a file or something that has all of that scanned in. We always transferred all of our leases digitally whenever we were in a sale. But when I'm in buying property, especially back years ago, I've taken over many property, and Monica and I have done due diligence on thousands of units, and where we've had to literally go in and pull files out of the filing cabinet, and thumb through the pages. That's fine. Either way, lease audit, you're taking your rent roll, and what you're doing is you're pulling the tenant application file. You're going through the whole file. First thing, is the same person living there? Does the name match, right? Second of all, is there an application in there? Did they sign the application? Is it a real person? Is it, someone who actually came in and qualified to live there? Watch for tenant qualification. That's something else you got to pay a lot of attention to. Sometimes landlords, especially on lesser properties, will drop qualifications and just let people move in, right? They may tell you, if you ask them, hey, what's your qualifications to live here? They may say, 2 times a monthly rent and income, or 3 times a monthly rent and income, no prior evictions, no felonies, things of this nature. Okay, fine, but how many times do they do a corporate override? How many times they throw those criteria out and leads to a person that doesn't fit the description anyway, right? So that's what you're after, and so you're trying to really make sure that this tenant base is real and qualified to live here. I sent in someone to do a lease audit on a large 264 unit property that I was buying at one point in time, and the individual who's doing the audit came out and told me, he said, Bill, there's probably 30% of the tenant base here that is not qualified to live on this property. They said they did not pass criteria. These are just heads and beds, and you need to be really careful. Well, I wind up deciding to take the property over anyway because I knew I had people like Monica with me. And long story, the occupancy crashed, right, shortly after we bought it. And the partners freaked out and they got upset. But I knew it was going to happen. I knew that the tenant base was going to decline, and I knew that Monica and I and our staff would bring the occupancy back up, and it would be fine. So I chose to do the deal anyway, but I knew going in, I knew eyes wide open going in there that these tenants were going to skip out on us, and so it was fun. But that's what you got to watch, that lease audit. So you're looking to check, make sure that they don't have evictions, that they are real people, Did they put down a deposit? Does it match? Check the rent roll. You're making sure that all these tenants are there. Now, depending on the size of the property would dictate how many of these I would do. If you're talking 10, 20 units, I'd probably look at every single file. If you're talking 100 units or 200 units or some sort of large property like that, then I would probably start off with maybe 20%, 10, 20% of the files. Go through those, see what condition they're in. Do you see idiosyncrasies? Do you see problems? If you're seeing things that don't match, pull another 10%. You pull another 10% and things still don't match, now pull all of them. Right. So, but again, you don't have to walk into a 100-unit building and sit down and pull every file and go through every single one. You just want to go through 10, 20%, see where you're at and go from there. So that's kind of your due diligence. It's the three major things. It's going in there, doing your lease audit, physical inspection. Now that we've talked mostly about interior walks. If you're worried about plumbing, electrical, exterior, you'll probably need to get a contractor to come out there. Pay attention to things like your parking lots. Look for things like life safety, trip hazards, rotten wood, anything that might hurt somebody. Pay attention to those things. And then you're going to go in and do your physical walkthrough. So those are your major due diligence items. Now, quickly, I'll just kind of describe what happens when you apply at a bank or a bank loan. You apply for the bank loan, you're going to put down an application or application fee. Application fee the bank takes, and then they send out for what we call the thirds or third-party reports. Bank is going to hire 3 different inspectors, and that is their due diligence. So we have your due diligence, and then we have the bank's due diligence. In the bank side, they're going to hire an appraiser. They're going to typically hire a phase 1 environmentalist, someone to come out and do soil samples, check, make sure there's no chemical spills. And then third, they are going to send out a physical needs inspector or an engineer to do a physical needs assessment, right? So the 3 reports from your bank are going to be appraisal, physical inspection, and what did I just say? Environmental, right? Those are going to be your 3. So that's where your loan application goes to. Now, keep in mind, and a lot of people ask me this, like, hey, should we hire an appraiser? No, you can if you want to, but the bank is not going to accept that appraisal if you hire the appraiser, by the way. And the appraiser is going to hire their own appraiser, by the way. So bank's going to do that for you. So that's where your money goes when you apply for a loan. We have thus far not been seeing a lot of contingencies in contracts. In my career, for the most of my career, we always had 3 contingencies: contingent upon appraisal, contingent upon inspection, contingent upon financing. Okay, as the market got super hot over the last 4 or 5 years, 3 years, we saw the contingency upon financing and contingency upon appraisal fall away. We are now starting, the contingency upon inspection was always there, unless you were one of these people doing, no money down, sight unseen, hard money day one, that sort of thing. Some people did that. I never did that, but anyway, point being, that's what you're looking at there. So you're starting to see these clauses come back into our contracts. Contingent upon inspection, always got to have that. Contingent upon financing. That's one that I would put back in there as a due diligence item. Contingent upon you getting that loan, especially with debt being a little wonky today. Start arguing to put that back into your contracts tremendously. Strongly recommend that you do that. And then contingent upon appraisal. That's going to be the other one you want to watch out for these days. Contingent upon appraisal, because appraisals are going to start coming in lower than expected. And so you want to make sure that you really are contingent upon those things. All right, so if anybody has any questions or comments, please post them in there. Monica said, just lease audit tip, watch for a lot of recent moves and dates. Great, moving dates. Yeah, great. I teach this to all my students when we learn rent roll, how to read a rent roll. Watch for your tenant turnover. Yeah, very good point. By the way, tenant turnover should be around 50% a year, on average about 2 years. Tenancy is about 2 years for the average. So if you see more move-ins and move-outs than about 50%, yeah, you want to be super careful, especially if you see, as Monica points out here, this kind of leasing occurring within 90 days of getting ready to list the property. Very suspicious. That's what I have seen is what I call a straw man lease up. Right, it's something I made up. Straw man is somebody that stands in for someone else, and a lot of times we'll see deadbeat landlords. They know the property doesn't operate well. They know that the tenancy is bad, and they know they can't sell that property with low occupancy. Heads in beds, poof, they get a bunch of occupancy, list the property, pump and dump, and then you come in behind it, and your occupancy goes back to where it was before. Ask me how I know. All right. Okay, so that's our lesson for today. One thing I do want to point out, and I made a mistake this week. Keith Wells was actually supposed to be our guest this week. Keith, I hope you're still with us. My apologies. I completely forgot. Keith. So I want to introduce Keith real quick, and then hopefully, if Keith is available, we will have Keith on next week or maybe the week after, whenever he is available. Keith is a longtime good friend of mine, and I was talking to him last week. Keith is a realtor in Atlanta, and I was saying, and Monica, I was saying we need to start getting some guest speakers on here to join me each week. And I kind of told Keith, hey, why don't we do this week's session? And then I have to admit I completely forgot. So sorry about that, Keith. But Keith is a great realtor in the Atlanta market, and he has a real pulse on what's going on. So, short order, if you're looking for a great realtor contact in Atlanta, certainly I am Keith right now, and we will have Keith back on. I'm gonna have to figure out how we do the dual screen thing, and we'll do an interview with Keith, talk about the Atlanta market, talk about state of realty and state of the market in general going forward. So we're gonna start having us some guest speakers. You don't have to just listen to my talking head every week. But Keith, again, my apologies. I forgot to have you on this week. Sorry about that, bud. Let's see if we can get you on next week or the week after, and we'll do an interview. But again, in the meantime, certainly reach out to Keith if you want to get a beat on the Atlanta southeastern markets. And Keith, again, feel free to post your contact here. Please do let everybody know how to reach out to you. All right, that's what we have for this week. If anybody has a comment, please post it. If anybody has anything they would like to hear about in the future, or if anybody would like to see me interview or speak to someone, or would like to recommend somebody, this is all organic, so let me know. But appreciate everybody stopping by, and we will see you next week. Take care.